We are currently living through an absolute explosion in the secondhand market. Right now, there is an $82 billion resale boom happening all around us. But while everyone else is hyper-focused on flashy tech startups or incredibly volatile fashion trends, there's a highly efficient financial engine quietly powering a massive chunk of this industry right from the background. So today, in this explainer, we're going to deconstruct this hidden $1.38 billion resale empire known as Winmark Corporation. Here is exactly how we're going to break this down today. First, we'll look at the resale industry boom. Second, Winmark's hidden franchise empire. Third, the sustainability selling point. Fourth, inside the financial engine. Fifth, rewarding the shareholders. And finally, we'll wrap up with the Winmark playbook. Let's dive in. Section 1, the resale industry boom, a macro shift. To really grasp the magnitude of Winmark's success, we first need to look at the global shift that is driving the secondhand market to just completely unprecedented heights. $82 billion. The U.S. secondhand apparel market alone is projected to hit that staggering number by 2026. But what's even more fascinating here is the sheer velocity behind it. Globally, the resale market is growing 3 times faster than traditional retail. We're witnessing a fundamental shift in how people shop, driven by tight household budgets and a major cultural pivot away from wasteful consumption. Demand for gently used clothes, sports gear, and instruments is surging. And, as we're about to see, one company positioned itself decades ahead of this exact curve. Section 2. Winmark's hidden franchise empire, the brands you know. You have almost certainly shopped at one of these stores or at the very least driven past them in your local strip mall, totally unaware of the corporate giant pulling the strings. Winmark doesn't just operate a single brand, they run 5 distinct category-leading resale brands. You've got Plato's Closet dominating the teen and young adult space, Once Upon a Child, which is an absolute powerhouse in children's gear with over 440 locations in North America alone, plus Played Again Sports, Style Encore for women's apparel, and Music Go Round for musical instruments. They essentially took the local thrifting concept, standardized it, and deployed it with brutal efficiency across highly specific consumer niches. Section 3. The sustainability selling point, circular economy in action. So why is this resonating so deeply right now? Well, Winmark perfectly aligns with the modern shopper by providing a direct, scalable alternative to environmentally harmful fast fashion. Just to put this in perspective, Once Upon a Child alone recycles an average of over 101.6 million items annually. That is literally millions of pounds of merchandise diverted straight from local landfills. But let's be real, it isn't just about feeling good. It's about the economics. Franchisees are offering high-quality brands at 70 to 90% off regular retail prices. By providing an eco-friendly model that also massively stretches a family's budget during tough economic times, these stores build incredibly sticky loyalty within their communities. Section 4. Inside the financial engine, scale meets efficiency. Okay, prepare to be surprised by this number. 87. That's it. That is the total corporate headcount for Winmark. This massive multinational retail empire with hundreds of locations and a market cap of $1.38 billion is managed by a shockingly lean corporate team of exactly 87 people. How on earth is that even possible? Well, to understand that, we just have to follow the money. Over the years, Winmark has enjoyed this steady, almost unstoppable compounding climb in revenue. Back in 2005, they generated $26.6 million. Fast forward to 2015, and it was up to nearly $70 million. And by 2025, they broke $86 million. If you run the math on that tiny 87-person headcount, Winmark is generating nearly $1 million in revenue per single corporate employee. That level of efficiency is practically unheard of in the traditional retail space. And the real reason Winmark wins where traditional retail historically struggles comes down to one word: risk. Think about it. Traditional retail is burdened with heavy overhead and massive inventory risk. If a fashion trend dies, the corporation is left holding warehouses full of unsold clothes. But Winmark uses a highly efficient asset-light franchise model. Corporate takes on 0 inventory risk, none whatsoever. The local franchisees are the ones buying and selling the used goods in their communities. Winmark just collects the royalties. And honestly, it works so well for everyone involved that they boast a staggering 99% franchisee renewal rate. Once a store opens, it pretty much stays in the Winmark family. And we can't understate how well this model works for the franchisees themselves. It forms a true lucrative partnership. As one Winmark franchisee, Marnie, put it, "It changed my whole life." The numbers definitely back up that enthusiasm. In 2025, the top quartile of Once Upon a Child locations pulled in over $2 million in gross sales per store, When your franchisees are making that kind of money, the corporate engine just keeps humming along flawlessly. Section 5. Rewarding the shareholders, the cash machine. So, what exactly does an asset-light company with basically zero overhead do with all of those growing revenues? Well, they ruthlessly and rhythmically return it to their shareholders. Instead of blowing cash on risky acquisitions or building out bloated corporate mega offices, management regularly executes major self-tender offers. In May 2015, August 2017, March 2019, and January 2020, they stepped directly into the market and bought back huge chunks of their own stock. This significantly shrinks the share count, making every single remaining share that much more valuable. And they don't just stop at buybacks. Add to that a relentless drumbeat of quarterly cash dividends, complete with consistent year-over-year increases to that base payout. But here's the real kicker. Like clockwork, almost every October from 2020 right through 2025, they have paid out massive special cash dividends. They literally generate so much free cash from this franchise model that they simply have to hand it back to the owners. Section 6. The Winmark Playbook. Summary. Let's bring all this together. Here is the 4-step playbook that transformed a sustainable retail concept into a truly unstoppable financial machine. Step 1. Capitalize on the booming second-hand economy. Step 2. Build an asset-light, multi-brand franchise network that shifts the heavy inventory risk away from corporate. Step 3. Keep overhead virtually non-existent. Again, just 87 employees running a billion-dollar empire. And finally, Step 4. Take all of that excess free cash flow and relentlessly return it to shareholders through consistent dividends and aggressive buybacks. As we watch the circular economy accelerate toward that $82 billion mark, with consumers aggressively demanding both extreme value and environmental sustainability, it really makes you wonder, is the heavy, inventory-laden traditional retail model becoming completely obsolete? The empire that Winmark has quietly built in strip malls all across America might not just be a great business. It just might be the definitive blueprint for the future of commerce. Thanks so much for joining me on this explainer, and I hope it gives you a totally new perspective the very next time you drive past a Once Upon a Child or Plato's Closet.